You are listening to ChartingWealth.com's weekly review and forecast for the week beginning the 14th of December 2015. We're approaching the end of the year very quickly. We always start with IYY, that is the total market. That's a total market index fund. What do we have going on? Well, the week ending the 23rd of November, we saw the market cross over on the moving average convergence divergence. That crossed our red exponential moving average line going up. So that is our key that the market was in an up move. It continued to move up until about the 6th, the week ending the 6th of November. And then what's it done? It's really transitioned just sideways. It ended the week about where the market began its, finished its up move on the 6th of November. It has started moving down, but we still don't have a crossing going down on our MACD, our moving average convergence divergence. We do have our derivative oscillator losing speed. Looks like the market may be moving to a cross going down. If we go and we look at what happened during the week on our daily chart, we see that the market beginning on the 7th was sort of in, we call this a doji. And again, for those of you listening by audio, I'll tell you what we see. It looks like a cross. The market actually opened about the same place that it closed, which means a lot of indecision. And we have since seen the market moving down on Tuesday, Wednesday, Thursday, and then particularly Friday, it went down about 2%. And we're in a confirmed down move on the daily chart. But again, the weekly chart's still in an up move. It may be moving toward a down move. We'll continue to watch and see what happens over the course of the week. Now, when we go back to our weekly chart, we see that the S&P 500, and again, for the day, the IYY, that is the total market, was down about 2%, as was the SPY, that's the Standard & Poor 500. And again, on the weekly chart, we see that it moved down pretty substantially during the week. Again, not quite as far down as where the week started on the week that it moved up the most, and that was the week of the 6th, ending on the 6th of November. We are still in a confirmed up move since the market crossed over going up on the week ending on the 23rd of October. I was calling that November. That's actually October. And the market has still not yet crossed over going down. The derivative oscillator's lost a lot of its speed. So we may see a crossover going down. We haven't seen it yet. If we revert back to our daily chart, what do we see? We see the daily chart actually crossed over going down all the way back on the 1st of December, starting on the 7th, which was Monday of last week. The market was in a bit of an up move that day, and that is again the S&P 500. And then it continued on Tuesday, Wednesday, Thursday, and Friday to move down. And again, that movement down on Friday was right at 2%, 1.94 to be exact. Now, let's go back to our weekly chart and look at the last of our indexes. This is the Qs. What is the Qs of the cubes? It's the NASDAQ 100. What's it been doing? Well, it crossed over going up on the 16th of October, well, actually the week ending on the 23rd. We always go to the next week there. We saw it go up until, again, like the other two charts, the 6th of November. Then it started sliding sideways, and where it ended the week was not nearly as far down as the total market was. If you remember, the total market was somewhere around where the market started moving up on the week of the 6th of November. When we look at the Qs, it actually moved down not nearly as much. It was down technically for the day on Friday of 2.3%, but not nearly as much of a down move as the market started moving up on the 6th of November. What do we see happening? Well, derivative oscillator, like the other two charts, has been losing a lot of its speed, but the MACD, the moving average convergence divergence, which is our main indicator, has not yet crossed over going down. So we're still in confirmed up moves on the weekly chart, on all three of our big charts, on the total market, on the S&P 500, and on the NASDAQ 100. We will continue to watch. We're in confirmed down moves, of course, on our daily charts, on all three of these charts, both the NASDAQ 100, the total market, and the S&P 500. Now, lastly, let's go to our weekly chart, and we will range out to see what gold is up to. We always look at gold last. Gold has been moving down, down, down. The last week, well, the week before, the week ending the 4th of December, was an up week for gold. It looked like a leveling out. It didn't move as high as it had started moving down the week before, the 27th of November, but it was an up move for that week. And what happened over the past week, the week ending the 11th of December? Well, we have what's called a doji, as I spoke about before. The market moved as much up as it did down, which gives us something that looks like a cross, which means a lot of indecision in the market. Now, if we go back and we look at what the daily chart, and for the day, gold actually was up on Friday, 0.55%. But what have we seen happening over the course of the week? Well, gold was down on Monday and Tuesday, up some on Wednesday, and then we have down candles on Thursday and Friday. Technically, gold was up 0.55%, but we are in confirmed up moves on the weekly chart, on the daily chart, since gold crossed over, moving up somewhere around the 30th or so of November. And what it basically did is it moved down after that, big down move on the 2nd of December, and then started moving up, big up move on the 4th, and then has sort of slid sideways since then. No big up or down moves since then. Gold, like I said, as far as the weekly chart goes, is still in a confirmed down move, having not crossed back over on the MACD since a big down move on the week ending the 13th of November. So we'll continue to monitor all these charts as we go into the new week. Now let's jump into, as we always do here on Charting Wealth, on what's happened over the last week news-wise. This is the only time we really can look at the news. The rest of the time, what do? We pay attention to the charts. But every now and then it's good to look and see just sort of what we're hearing from the news media. Here's what we've heard. U.S. retail sales were strong in November. U.S. core retail sales, when we exclude automobiles, we exclude building materials, food services, and gasoline, increased about 0.5% in November, and that was greater than the consensus forecast of about 0.4%. We look at U.S. import prices slumped. That was because of cheap oil. More workers gained confidence by quitting their jobs. That's the second highest number since the recession. That is a potentially good sign. Interesting, though, the markets were down. Well, again, who knows? Free money seems to be the big thing that drives the market. That's why we look at the charts and not listening to the media noise. We also see foreclosures at an 8-year low. U.S. producer prices rose 0.3%. Consumer confidence is at a 4-month high. We see China's trade levels are still weak. Eurozone GDP grows about 0.3% for the third quarter. And as we get into the things that will be affecting the market this next week, let's pay attention to some things. We see starting on Monday, the Eurozone industrial production is going to be reported. We see that on Tuesday, Germany's ZEW survey is going to be released. And then we see happening on Wednesday, the U.S. Federal Reserve is going to make a much anticipated policy announcement. Pay particular attention to that on Wednesday when that news comes out. In addition to U.S. industrial production and manufacturing data, the big potentially market moving news is going to be what we hear out of the Federal Reserve on Wednesday. Pay attention to what's going on there. Be careful to protect any gains either on losses where the market's been going down or where the market in whatever it is you're looking at has been going up. Also on Thursday, we're going to see the U.S. leading indicators will be released. So Wednesday may be a day with Federal Reserve news that could impact the markets because, again, remember, it seems to be more important what the U.S. is doing with its monetary policy than how good or bad the markets or the world is actually doing with increasing production and things that can actually add value. It seems the most important thing is whether or not more free money will be occurring. Well, thank you so much for listening to us as we have reviewed for you the total market, the S&P 500, the Qs, and gold. We appreciate you joining us every day at chartingwealth.com. Thank you so much. Hope that you have a great day and a great week trading.